Hello everybody and welcome to this video. The European Confederation of Directors Association has developed a series of videos especially addressed to European board members. So the intention is to stimulate reflection through expert testimonies. The video that you are watching is about fraud and it has been done in partnership with PwC. We have two guests in conversation today, Virginie Lagrange and Fran Marwood. Both of them are going to introduce themselves.
I'm Virginie Lagrange. I'm an independent director, mainly responsible for boards in financial companies, be it banks, management companies, funds, or insurance. I also often chair audit committees, risk committees, nomination, remuneration committees. I'm a member of the board of ecoDa's, and I'm also the vice chair of ILA in Luxembourg, which is the Institute of Directors here. And I have more or less 29 years of experience in financial services. Today, I will speak together with Fran Marwood from PwC.
Thank you, Virginie. So I'm a partner at PwC based in the UK, and I lead our investigations practice in the UK. I'm a forensic accountant and fraud specialist, and I've been helping companies and boards over the last 25 years really to investigate fraud and integrity issues, to make subsequent recoveries after the event, to help them manage fraud risks through compliance frameworks and using forensic technology within all that.
Let's start then with the first topic, which is the Global Economic Crime Survey that has been performed by PwC and the impact of pandemic. So my first question to you, Fran, is how have you seen fraud and financial crime trends change over the last couple of years?
We run our Global Economic Crime Survey every 2 years and have done since the early 2000s. So it gives us quite a good sense of how things are changing over time. There were some interesting results this time, and I'll just spin through a few of those just to give us a sense of where those changes sit. But fraud is increasingly prevalent. There were 5,000 respondents to the survey this time around. So 47% of those said they'd experienced fraud in the past 24 months, which only the second highest we've ever seen. So fraud is still at an all-time high. The top 5 types of fraud had a new category that came in, which is customer fraud, which is whereby fraudsters are using the customer channel of a business to defraud the business. So we saw that for the first time, and that was the highest single type of fraud, with cybercrime, theft of assets, and bribery and accounting issues coming in after that as key topics as well. The most disruptive fraud, interestingly, was accounting and financial statement fraud, but also competition issues and asset theft were seen as being very disruptive. Mm. The top perpetrators, when you sort of think about the last 2 years, has changed more towards external over internal perpetrators, but external fraudsters like customers, like hackers, like the vendors and supplier relationships, they represented 39% of all frauds. And then from an internal point of view, which often gets overlooked by businesses, thinking of fraud as more of an external threat, there were 37% of those frauds that were effectively carried out by internal protagonists. And the main section of those were middle management, interestingly. Just to cover how fraud gets detected, internal and external audit continue to be the main way that fraud gets picked up. So 25% in total of all frauds that are detected are picked up by audit. And then closely followed by suspicious activity monitoring, but also the use of sort of detective analytics, forensic technology in a way. And that's increased 4-fold from 2018. So it's a really interesting theme as to how businesses are finding fraud.
And what I see more and more often, at least in the boards where I'm sitting, are some new cybercrime tentatives, which are called wishing and simsing, which is more or less a voice phishing and SMS phishing. Is it coming out of the results of your survey?
Not necessarily in the survey specifically. Cybercrime is featured, but not the different components of it. But from a practitioner's perspective, we see a huge amount of this type of attack, and it often falls within the sort of the external category that I just mentioned earlier. You know, the different types of phishing, spear phishing, and those sorts of incidents whereby third parties target a specific business. They get a route into that business, often through someone clicking on an email with an attachment and by allowing access to the systems. And then what those fraudsters do is to impersonate a senior member of staff and then tend to ask other individuals to pay third parties who are unaware that the money will be going to the fraudsters' accounts. And I've seen many businesses who've got on those in time recover the money, but I've equally seen a large number of clients who've not seen the issue and the monies have gone. The sums involved can be quite significant. So it's one where all management need to be very diligent about how they train their people.
Yeah, and I think that's also where monitoring of unusual transaction is something that is getting more and more important.
That's right. I mean, one of the features of the technology, both as a threat that we've just talked about, but also as a tool for good, if you like, whereby, you know, the use of analytics and monitoring is becoming a lot more effective. AI is meaning those tools that used to generate masses of false positives now can really sort of start to home in on transactions and prevent them. And just to cover those other two topics as well, the first one is that, you know, we see a lot more incidences of businesses telling us that accounting fraud is a key issue, and that tends to be on the rise when you have external pressures to perform, when the underlying performance of the business isn't quite so good. And unsurprisingly, COVID has created some of those pressures. And then the other one is around fraud risk and maturity.
Yeah.
The number of businesses that actually think about and manage their fraud risks proactively is relatively very small.
I agree with you that often the level of maturity of companies regarding fraud risk assessment is sometimes low, or too low at least for current circumstances. Fran, can you also tell me how have fraud risks changed as a result of the pandemic? What did you see?
Well, I mean, the pandemic had a huge effect on how businesses do business, and that's led to a lot of changes in terms of working practices and the way in which businesses carry out transactions and implement controls over those. And those have given rise to some interesting themes. We look at fraud through the lens of the fraud triangle, which is all about the incentives, opportunities, and rationalization, so that you can break down the issue and think about the different components. But from that point of view, in terms of incentives, you have a lot more incentives for people to commit fraud, either job security or financial difficulties. There are more opportunities because, as I mentioned, people remote working needs control workarounds, and that gives rise to opportunities. People aren't seeing one another face to face and double checking when the spear phishing attack happens, and then rationalization, which is how individuals justify wrongdoing. And there are a number of effects whereby those have increased as well in terms of, you know, financial pressures and keeping up with competitors and that kind of thing. We also see that, you know, the working practices point becoming more and more of an issue, and businesses actually now doing specifically reviews to look at how they've made changes to working practices to sort of tighten that up. There's been a huge influx of state money to businesses, which we'd all agree has worked really well for business, but it has given rise to a huge opportunity for frauds as governments get to grips with the retrospective review of who they've paid that money to. There will be an element of fraud coming out of that. And then just thinking about the sort of downturn effect of things like COVID, none of us know what the long-term impact is going to be on business at this stage, but to the extent that certain sectors have experienced real difficulty, I'm sure there will be elements of those businesses where the accounting issues that we've already mentioned will come to light. And certainly in the past, with the dot-com crash and the 2008 recession, there were many examples of businesses at those times that pushed the envelope on accounting. And, you know, we've already started to see things like Wirecard and others. So, Virginie, I was wondering if, as part of your roles, you've seen any themes in fraud risk increasing as a result of COVID?
What I saw definitively is an increase in cybercrime, in all the different aspects of cybercrime, because as you mentioned, people are working remotely, there are less controls, probably more difficult to detect. People are also more stressed. I think we should not underestimate that. And yes, that the hackers or people are there to misabuse these people. So this is really something I saw in the boards where I'm sitting. And what I saw also in this increase is that the organization, sometimes they don't have the right systems in place to catch up all these cyber frauds. So sometimes they are hacked and they don't even know it. It was true before the pandemic, it's even more true now. What I see also more and more is clearly customer fraud. That's something that happens more and more. I saw, at least in my board, no fraud from management or senior management. But of course, this could happen. That's for sure something where people have pressure. I'm not excluding it. So these are the main type of frauds I saw happening since the beginning of the pandemic.
I agree. We certainly see all of those from a sort of practitioner's point of view. The one that's interesting amongst that is procurement fraud, which include many of the topics that you've talked about there, but the sort of collusion between individuals inside the business and outside of the business, and then to receive kickbacks as a result, is something that I'm seeing quite a blip in terms of the work that I do. And it's quite tricky because it's one of those that doesn't leave an obvious footprint unless it's sort of within the email of the business or the actual transaction itself. But there's some great technology out there now to enable you to focus in on the transactions where those sorts of issues are problematic, where bank accounts change and things like that, which leave markers. So that's an area that we're really interested in.
Yeah, and I think when there is collusion, it's even more difficult to detect because we are not trained for that. And it's often by coincidence or by some whistleblowing that you detect this type of frauds.
I think that's right. And, you can't underestimate the effect of good quality, sort of what you might say, old-fashioned four eyes principles over transactions. But I think as processes become more and more electronic, I think the sort of analytical approach using forensic analytics is going to be increasingly powerful going forward. And we've seen a fourfold increase over the last 2 years. And if you sort of think about how IT capabilities increase over time, I can only see that getting better.
As we mentioned before, there are many companies that aren't managing fraud as effectively as they should be, and that they don't understand the breadth of the business as they should, which also leads to additional fraud risk. So the definition of fraud risk is very broad nowadays, and it's getting broader and broader. You have a large scale of different risks that needs to be addressed. We already discussed it. You have all these internal risks, asset misappropriation, which is one very classical. And you are exposed also to all these external risks that were maybe not that present before. Like you mentioned it, Fran, the procurement fraud, the customer fraud. And then you have all these IP threats and all these payroll frauds. So I think what is difficult for business and for a board to understand and to cover is really the breadth of all these different risks that they should integrate, and which was less the case before, I think.
I think that's right. One of the difficulties, we had a slide on the range of different topics that are out there. And there's a huge range of those, everything from bribery risk to theft of intellectual property. And I think most businesses that we see have a good basic idea of where their risks sort of sit under those key headings. But I think the ones that understand their risks properly tend to consult more widely in their businesses on past schemes so that they've got a clear idea of how they've been hit before. They think about specific business functions and activities. So it's about breaking down the issue into individual parts of the business and thinking, right, well, how do these affect that part of the business? It might be non-core, it might be your premises. What are the fraud risks associated with your premises? And then really just spending time collating a broader range of internal and external threats that then evolves over time. One of the big mistakes is to do it once and then forget about it. What we've seen in the survey over the last 2 years, the change. The thing is moving all the time, so just making sure you're on top of that is key, really.
I fully agree. It's learning from experience and also what others are doing. I think that's also very important.
So Virginie, I mean, sitting on your boards, you must see a lot of different approaches to how businesses manage the risk of fraud. What do you think businesses need to be doing more effectively to manage fraud risk?
It all starts with having the proper governance in place in your business, having the proper 3 lines of defense, having the right policies and procedures in place and fraud risk policy. I often see it having an anti-fraud committee in place, which is also analyzing what type of new risks are popping up and how the organization could face these new risks. And on top of all of that is the role of the board. The right tone from the top, for me, that's really, really crucial. And it's also how the board is working together with the external auditor, with the internal auditors, to make sure that there is this open discussion between the board or the audit committee, if you have an audit committee, and your auditors. That's something very important, and the open discussion with the management. I think that's something that is really, as a board member, you trust your management, you should have these open discussions, and you should make sure that no one from the management is trying to hiding you something. It all starts with having the proper governance in place. Then, of course, we discussed the fraud risk assessment, making sure that you really assess properly all your risks, that you have the right controls in place, and that you can properly mitigate your risk. You need to have this risk cartography in place also for fraud risk, which is very important. On the fraud prevention, we discussed more about detective control, but not that much about preventive controls. I think that's also something that is really important. Think about what controls you can put in place before it happens. Here, the organizations are still sometimes too weak or still need to progress. That's not in their DNA for most of them. And finally, yes, having the right response to fraud. When it happens, how do you communicate the incident? What is your communication plan? Who is going to communicate? All this is something that is often forgotten, not anticipated. The problem is when you are in the middle of that storm, it's very difficult then to decide.
I'd agree with all of that. I think on that fraud response point, that we always look at it through 3 lenses. There's the scope, getting the right scope of the work to make sure you've covered all the angles, making sure you've got independence from the potential folk who've been involved in the matter, and then the expertise which can sit within the business or outside of the business. And you make a really good point around the controls of the business. One of the things we see really good businesses do is to learn from the issues they have and to make sure that there is a sort of loop back to the control framework that says, well, we've been hit by this issue. What do we do to the controls to make sure it doesn't happen again? So that's a key learning. Yeah. The other thing, drawing out a little bit more, is just around fraud detection. I mentioned it before during this conversation, but I think that's going to be a really key theme as we go forward over the next few years.
Yes, and I think the other point where I see that we are still sometimes lacking behind is on training at all levels regarding fraud. Before, the boards had some training on cyber risk, cyber security, but yeah, for them it was quite abstract. Now it's getting much more concrete, and I think the board needs to be interested into this topic. It's not just a nice to have, it's really the responsibility of the whole board and being appropriately trained on that. And this is the way you can manage the risk.
I agree with that. And as you say, it's appropriate in different forms right the way through the organization, because the person who accepting an email somewhere within the depths of the organization and clicking on the attachment could be the gateway to a massive multi-million-pound loss. So having everybody aware of the risks is a real key.
As we said, the biggest threat to your organization is between the keyboard and the chair. So thank you, Fran. I think we can move on to the next question. Fran, if you can highlight us what you see as technological development to effectively manage fraud risk.
I think historically, a lot of the technology that we used to manage fraud risk quite simplistic in that it applied searches and rules-based analytics and then kicked out many thousands of exceptions that some user had to go through one by one and lost interest halfway through. We call that false positives, but I mean, a lot of the movement in technology over recent years has been to get a lot more sophisticated and to use the learnings of the business to sort of home in on individual things within whichever part of the business that are more interesting. So we see the automation of manual detective processes. We see external data such as corporate intelligence feeding into those systems, particularly around things like supply chain risk. We see more sophisticated anomaly detection taking place and AI, which we are using increasingly on investigations, which is a game changer in those areas when you've got huge volumes to get through. And then, things like technology assisted review, when the issue happens and you're investigating and you're looking at communications, you could either use keyword searches and look for themes, but you can also turn on technology assisted review, which sort of looks at what you've chosen and then chooses the rest that are most like those. And in all honesty, it's mind blowing. The searches like that can highlight. I suppose the other areas, I sort of touched on it, but just to go into a bit more detail, the use of online intelligence to help you understand from a diligence perspective, either who you're doing business with or business partner risks or customer risks is an increasing theme, and there are platforms out there that do that. And then things like investigations and case management, just the way in which those processes are run now, and some of the technology that helps around that is changing the way we do investigations.
I see it also in the insurance field where they use more and more AI to really monitor some potential frauds of their policyholders. And that's something that has developed quite a lot since, I would say, 1-2 years. That was less the case before.
Absolutely. And the beauty of those sorts of systems is that the more you use them, the better they get at finding the issues. Certainly we'll have more of those going forward.
We can move on then to the last part of this presentation about the responsibilities of the directors, what questions they should ask, and some red flags.
So, Virginie, how do you feel about the role of directors in fraud risk management? You must see different approaches, and it's obviously a changing theme that you'll see in different board roles. I wonder if you could give us some perspectives on that.
I think that the role of the directors regarding fraud risk and the responsibility has increased in the last 1-2 years. It starts with having the proper governance in place, and I think the European regulation is putting more and more pressure on that governance aspect. It's really defining what is your risk appetite, what are your policies, what do you do for fraud risk. The directors are clearly liable. It's also the responsibility of the directors to define proper reporting process for financial statements. So in case financial statements are wrong, the director is responsible for that. It's a collective responsibility, and you should be able to ask the quick questions. That's why I think that training of the board is something key. You cannot just say, I was not the expert in that area, that's why I didn't ask the question. That's no longer possible nowadays. You should ask yourself when you sit in a board, does this board have sufficient experience on fraud risk? One question I think that is also important when you are in a board, it's also regarding the responsibility of the director. It's, do I really trust the management? Do I have this trust relationship with them? Do I have the open communication? Can I make sure that what they tell me is sufficient, really reflects the reality in order to enable me to potentially also detect fraud on my side? The responsibility of the directors is definitively increasing, and they should also liaise much more with external audit, internal audit. It helps a lot to understand where the external auditors also see the key risks.
I agree with you, Virginie, that kind of close relationship with management is absolutely key to all this. But there are a few questions that will be popping up on screen, and maybe just if we go through those around the preparedness, things like, does the fraud risk assessment reflect an up-to-date view of the business? asking management as well whether they've considered the internal and external fraud threats.
Yeah.
What are they doing to prevent and proactively identify fraud? And then from a response point of view, is there an incident response plan? Who's going to investigate this? Do we have the right procedures to address any sort of specific regulatory disclosures that are needed as a result of this? And then there's an interesting point around emerging stronger, and we sort of touched on it earlier about the loop that goes back into the control framework of the business. But is the fraud reporting sufficient? And getting good fraud reporting and whistleblowing reporting on the incidents that have happened really opens up a view on what's going on within the business, learning from incidents, as I've mentioned, and asking questions about the evolution of techniques of fraud detection and ensuring that there are effective counter-fraud programs in place are all key themes.
Whistleblowing is for sure something that is important. I see it increasing. You have more and more whistleblowing within the company, which I think is good because it shows also that people are not afraid to speak out, and it's often a good way to detect fraud.
It is, and there are different regional variations and cultural impacts that come into play with whistleblowing, but I think increasingly as individuals gain trust in how whistleblowing is handled, it becomes much more widely used. I think the key is there that they only work if there is that sort of mutual trust on the part of employees. So making sure that the fairness of how the whistleblower is dealt with is key. And obviously we've got the EU whistleblowing directive coming in that deals with that.
Fraud risk reporting, it's an interesting point also because for the time being, fraud risk reporting is mainly an internal reporting. But there are also discussions at the EU level to have another set of fraud risk reporting that all the companies will have to provide sooner or later. So let's move on to the last question. What do you think are the red flags that should alert all directors sitting on the board?
There are very many red flags that you come across as a practitioner, but there are certain ones that you see more frequently than others. It's probably useful just to think about those in terms of the fraud triangle again. So breaking the issue down in terms of opportunity to commit fraud. That tends to happen in businesses where there is poorer control framework. So strong controls that are well adhered to. It's just much harder to get away with these things. One thing that I've seen an awful lot of is where you have poorer quality and under-resourced finance teams. And sometimes finance can be seen as a very much more of a sort of commodity part of the business, but just making sure that finance is well invested in and that it is a strong function really helps here. As does a focus where you have overly dominant senior management. It can be indicative that instructions are taking place behind the scenes that others might not be willing to talk about. Thinking about incentives and pressures as well, but where businesses aren't performing quite so well, where forecasts and budgets might be a little over optimistic, where businesses have quite aggressive expectations from the market, where they might be close to their debt covenants. All these issues give rise to pressures, and it's useful thinking about where a business is in its cycle as to where the relative risk might sit. And then from that rationalization point that we mentioned earlier on in our conversation, how easy is it for an individual to justify getting involved in fraudulent activity? We see this where there's a heavy blame culture. So if you get an organization where mistakes are tolerated and collaboratively fixed, then you're much less likely to get a fraud or a misstatement or an issue arising than where you've got a culture where there's immediate blame, deflection. An open business is a much safer business from a fraud perspective.
I fully agree. I think if people don't feel free to speak out, you have the tendency to have a higher risk of fraud. What I see also as a potential red flag is when you as a board, you receive too much information or not enough information. And you mentioned also sometimes it's good to have board meetings without management. It's a way to avoid some potential issues that you might have. Do it also with your external auditors. It helps. For me, what is important is when you don't have the right tone from the top. We've been through all the topics we wanted to cover for this video today. I thank you all for watching this video. We enjoyed it, having this discussion together, and hope to see you soon again. Thanks.
It's been a great pleasure. Thank you.